Imagine this. It's 2020 and a CEO known for his traditional business acumen shocks the financial world by announcing that his company is ditching cash reserves to invest billions. Not in gold, not in real estate, but in Bitcoin. Cue in Michael Saylor, the man who transformed his company MicroStrategy into a Bitcoin powerhouse. With a strategy some might call daring, or even audacious, Saylor went on to leverage billions in corporate debt to acquire a treasure trove of digital gold. But why would someone take such a massive risk? And more importantly, was it genius or reckless? Let's dive into one of the most intriguing stories in modern finance. Let's rewind a bit. Since its inception in 1989, MicroStrategy had become a successful business intelligence firm, stable but unexciting. Then, in 2020, as the world grappled with a pandemic and economic uncertainty, CEO Michael Saylor noticed something unsettling. Inflation was eating away at his company's cash reserves. That's when he had an epiphany. Bitcoin, with its capped supply of 21 million coins, could be the ultimate hedge against inflation. In August 2020, Saylor made a bold move. MicroStrategy invested $250 million to buy 21,454 Bitcoin. But this wasn't just a one-time experiment. It was the start of a revolution. Over the next few months, MicroStrategy didn't just buy Bitcoin. It adopted it as a corporate treasury strategy. By the end of the year, the company had invested over $1 billion. At first, this seemed like the wild gamble of a man out of touch with reality. But Saylor saw something others didn't. He viewed the US dollar as a melting ice cube. Inflation was quietly eroding its value. And to Saylor, Bitcoin wasn't just a speculative asset. It was sound money. It was the antidote to a broken system. But Saylor wasn't content with just using his company's cash to invest in Bitcoin. He had a much bigger plan. Here's where it gets fascinating. To fund additional Bitcoin purchases, Saylor turned to the debt markets. MicroStrategy issued $650 million in convertible notes with an ultra-low interest rate of 0.75%. Convertible notes are essentially loans that investors can later convert into company stock. By using these notes, Saylor raised funds without immediately diluting shareholder value. It was a smart and calculated move. But he didn't stop there. By mid-2021, MicroStrategy issued another $1 billion in notes. Then, in 2024, the company sold $1.75 billion in convertible bonds at a stunning 0% interest rate, later upsizing this offering to $2.6 billion due to high demand. Think about that. Borrowing billions without paying a dime in interest. Saylor had found a way to play the system, leveraging historically low interest rates to secure massive amounts of Bitcoin. By late 2024, MicroStrategy had acquired over 331,000 Bitcoin, valued at over $30 billion. Here's the genius of Saylor's strategy. He used Bitcoin's growth potential to make his company's balance sheet work harder. And because Bitcoin's values soared during this period, MicroStrategy's stock became a proxy for Bitcoin. Investors started treating the company not just as a software firm, but as a Bitcoin holding vehicle. MicroStrategy's market cap exploded, and other companies took notice. Of course, not everyone was convinced. Critics argued that tying MicroStrategy's value to a volatile asset like Bitcoin was reckless. If Bitcoin's price plummeted, the company could face significant impairment losses. And yet, Saylor remained steadfast. To him, Bitcoin wasn't just a speculative asset. It was digital gold. He even became a vocal evangelist for Bitcoin, hosting events to educate other CEOs about adopting crypto for corporate treasuries. Now here's where Saylor's philosophy takes a sharp turn from conventional thinking. When asked when he plans to sell MicroStrategy's Bitcoin, his response was jaw-dropping. He said, "Why would you sell dollars for Zimbabwean dollars?" His point? Fiat currencies, whether the US dollar or others, are ultimately depreciating assets. Bitcoin, he argues, is the only form of money that is incorruptible and deflationary, a true store of value. In fact, Saylor has often compared Bitcoin to a lifeboat on the Titanic. To him, selling Bitcoin to hold dollars would be like jumping back onto the sinking ship. Michael Saylor's bold moves didn't just impact MicroStrategy. They shifted the perception of Bitcoin in the corporate world. His strategy inspired companies like Tesla and Square to add Bitcoin to their treasuries. It also catalyzed discussions about the role of cryptocurrencies in corporate finance, asset diversification, and hedging against inflation. And despite concerns around Bitcoin's volatility, Saylor's strategy has so far yielded significant returns, with Bitcoin's value appreciating well above MicroStrategy's average purchase price. By transforming Bitcoin into a core corporate asset, Saylor effectively redefined MicroStrategy's valuation model, tying it closely to Bitcoin's market performance. This shift raises questions. Will Bitcoin adoption by corporations become the norm rather than the exception? But what happens if the winds change? Rising interest rates could make borrowing more expensive, and a prolonged Bitcoin downturn could strain companies following Saylor's lead. Is this strategy a visionary blueprint for the future, or a cautionary tale waiting to unfold? Only time will tell. Michael Saylor didn't just buy Bitcoin. He created a playbook for leveraging the financial system to build a crypto empire. His story is as much about innovation as it is about risk, and it highlights the power of conviction in the face of uncertainty. Whether you're a finance professional or just curious about unique business stories, Saylor's strategy offers plenty to ponder. So what do you think? Is this the future of corporate finance, or just a risky bet that happened to pay off? Let us know in the comments. And don't forget to like, subscribe, and hit the bell for more insights into the world of finance and beyond. Until next time.